The market participants are looking to take delivery immediately of their silver of physical metal versus having to hold the futures contracts. And this is being driven by the threat of tariffs in large part by Trump. So this morning was his inauguration. There was, again, some talk of tariffs. I've heard that he's sort of dialed that down a little bit, but that certainly is not resolved, and I'm sure he'll be willing to pull that out any time it's in his favor. Financial crises are really not that abnormal. They're in fact quite normal, and they're to be expected. And someone else actually ended up coining the term Minsky moment. And really the bottom line of it was that he was saying that crashes come from excessive debt, which builds up and ultimately leads to instability and eventually a crash. They're actually plowing a lot of their own money into being completely independent, not relying on utilities to power this, because the utilities are telling them, you cannot count on this to have the kind of power that you need. So it makes a lot of sense. They have the ability, they have the funds, they've been turning to something like nuclear. It's baseload power. It's very predictable, it's very reliable. But for example, someone like Microsoft is committing $80 billion to power for its data centers over the next couple of decades. The market participants are looking to take delivery immediately of their silver of physical metal versus having to hold the futures contracts. And this is being driven by the threat of tariffs in large part by Trump. So this morning was his inauguration. There was, again, some talk of tariffs. I've heard that he's sort of dialed that down a little bit, but that certainly is not resolved, and I'm sure he'll be willing to pull that out any time it's in his favor. So to kind of sum that argument up, really what they're saying at TD is that metal is flowing from London to the U.S. on Trump tariff fears, and just 30% of London silver is really available for delivery. So these are getting really tight in terms of markets. This is a chart that shows the LBMA inventories, the London inventories. They're at near historical lows, or I should say near decade lows, very much long-term lows. Just December had a 23 million ounce drawdown again. And as you can see, that's near the lows of the decade. Just to break down the inventories a little bit in London, we're talking about a total of about 825 million ounces. Of that, about 525 is committed to silver ETFs. London is the place where silver ETFs, for the most part, choose to store their silver. So that leaves a free float of just 300 million. About 250 million is required for daily trading. And so you really have a buffer, a historically low buffer of just about 50 million silver ounces. Similar thing is happening in New York on the COMEX. Only 23% of their 300 million ounces are what we call registered. So that means just 70 million ounces are actually available out of the 300 million ounces for actual physical delivery. So although it's a little bit counterintuitive, we've seen the inventories in New York spike up. But if you think about what I was saying earlier, how they were trying to front run the risk of these tariffs. So if they would have had to import their silver from London or somewhere outside of the U.S. into the U.S. and the tariffs were put into place, they'd be at risk of having to pay those tariffs on the metal. So they were trying to get ahead of that. And so that's why I think we're seeing that spike in the inventories there. At the same time, participants are taking delivery. So it's one thing for them to have a claim on the silver at the COMEX. They're more comfortable in having direct control over it. So we've seen a spike in deliveries from the COMEX of the physical. We've seen a similar bit of activity in Shanghai in terms of inventories. I think similar reaction there, risk of threats. The premiums in Shanghai, they've been higher, but they've actually just spiked. If you see on the very right, they've spiked again. They're paying almost 10% above New York prices. In India, it's a little bit different in terms of what's driving that, but they've turned to silver in a big way. I think they've found gold has become very expensive for them. I'm being told anecdotally that they're turning to, although they love gold, they're buying silver, and now they're buying gold-plated silver. So they're getting the gold look, but they're actually paying mostly for the silver. And so a lot of money they've started to develop their own silver ETFs. There's about $40 million a month since early 2022 that's flowing into silver ETFs in India. And in India, their premiums are being driven probably a little bit by different drivers, more so by the debasement of the rupee, but they're at 20% over New York prices for silver. And this is in the short-term contracts. The futures over spot, futures to spot spread popped in January. I think there was some news then about tariffs again on that day, and they jumped 50%. So it's a small premium, but it jumped by 50% in that same day. And if you look at the long-dated contracts, they're $5.50 over spot price. That's the highest we've ever seen. It's higher even than when silver was at $50. And again, that's the market signaling that they expect silver prices if you look farther out. One of my last charts, I thought this was kind of interesting. I went back and looked at what the Silver Institute said back in April of last year when they put out their silver survey for 2024, and then they ultimately revised it here in November. So what they said at the time was that the silver deficit, so that's essentially this number here, 182. Back in April, that was about 215 million ounces. So they revised that, saying that they thought that investment demand was actually going to be a little bit slower than expected. They revised that later in the year. But what's interesting is that if you include this number, which is silver flowing into silver ETFs, they actually revised that from 50 million to 100 million. So if you include flows into silver ETFs this year, their forecast, 282 million ounces. Look over here in 2020, 300 million ounces. We're almost at record deficits again if you include silver flowing into silver ETFs. So that shows you again the market is very tight, and we've started to see that happen right here in July of 2024. Silver flows into SLV, which is the world's largest silver ETF. We've seen silver start to flow back into that ETF in a big way. And one last sort of little tidbit in terms of how different players are starting to act on their silver. Russia has done two interesting things recently. Their central bank has said that they're going to add silver to their reserves for the first time, in addition to gold, platinum, and palladium. And the Russian government, back in late November, said that they were going to ban the export of waste and scrap precious metals. So they really, from December until the end of May this year, they want to keep their silver at home. I think they're starting to see it as a strategic and a critical metal, and they're playing their cards close to their chest, and they don't want to get caught off guard. So this is a chart that shows the price of silver adjusted for inflation. It peaked at adjusted $145. It gives you some potential for where silver might go eventually.